Hi guys, so this is my quick analysis recap on gold, guys. What are we expecting on gold? If you watched my previous analysis on gold, I said I was expecting gold to get to my negative 27% fib level, which is around 2067.93, and as we can see, that was a beautiful one. We got to around that area right there. We can see that we hit my negative 27% fib level right around here, and we continue to tap to the downside. So like I said, that was a really good trade. And if you've been watching my analysis, my negative 27% fib level is a reversal zone. So most of the time, it doesn't work all the time, but most of the time we get to my negative 27% fib level, there is some sort of a reversal, and we can see that we are currently giving some sort of a downtrend, so which also aligns with this counter trend line right here. We can see this counter trend line that we broke this counter trend line. We are seeing a sort of a retest, and now I'm seeing a sort of a continuation to the downside. So I'm gonna delete this tag here. Let's see right here, and let's see. So we are currently pushing to the downside on gold, guys. So let me readjust this analysis. So let's go to a bigger time frame just to see, but I'm seeing it down most certainly on gold. So if I go to a much bigger time frame, we can see that we're pushing to the downside. So overall, right, because we can see, like I said, there was this break of structure right here. It came to retest around this area right here, so there's a possibility for us to continue to push to the downside. Before we actually see a good buy on gold, we have to at least be patient for it to break this trend line right here, give us a possible retest for a higher low, for us to know that it has shifted, and we might continue to push to the upside a little bit to either see whether we're going to push to the downside or push to the upside. But as of right now, as long as we are below this trend line, I'm expecting a sell. So that is what you're looking for, like overall. And we can see I'm seeing like an impulse, a sort of a correction, and a continuation to the downside. And my first target will be around 1973. That will be first TP for the bigger time frame TP, right? And the second, it's gonna be 1928, but I don't like predicting too much of the future. I'm just saying this because this is like the overall direction I am looking for. So on gold, as of right now, I am looking for a sell until otherwise happen. Like I used to say, you don't predict the market, like we know, right? There's a saying, you don't predict the market, you react to the market. So now I see it like sell, and we can see that the retracement has finished based on my smaller time frame. We can see that the retracement around this area right here, my negative 27% fib level, and now we are tanking to the downside, which is great. So let's see, let me now go to around this area right here. Let me see my 2 hours to see. I know I had let's see, delete that. So if I draw a trend line right here, let me see, that makes sense. So because we are there, right, I am predicting that gold is going to continue to push to the downside. We can see that it's giving us the lower high already, so that's a prediction that we're pushing to the downside. And like I said, majority of the time my negative 27% is a reversal level, so I'm just going to draw my fee from point A to point B. Let's use a shorter one. Okay. Let's go to a bigger time frame just to see. Let's see what my followers is doing. So let's say, like, I don't like when it's not retracing directly from a fib level. We can see that it's not wicking out or anything, so that's a little bit trickish, but I'm still predicting it to be a sell, guys. But sometimes, like I said, right, sometimes the market is not always as clean as we want it, but when it rejects directly from a fib level, like especially when we see rejection, it's more certain for me than when it's pushing up and we are not seeing a lot of rejection. But let me go to, but I still see it at least pushing to the downside. So yep, 30 minutes. I want to look for an imbalance to see. Okay, we're still pushing to the downside. We can see that around this level right here, my 61.8% fib level, we rejected like a lot of time, and so I'm continuing to see a push to the downside certainly, and it still continue to give us a lower high. So I can draw fib right here. So a trend line is drawn just for us to see that okay. So it's not that much for us to do on gold, guys. My first TP will be around my negative 27% fib level. First TP will be here, and we can see that that aligns with a gap. We have a gap right here, and that is why I say majority of the time my Fibonacci just go aligns well with market structure, and whenever we align with market structure, it just make that a confluence for us to know that there's a possibility. Because let's assume that there was no Fibonacci drawn on this current price action, right? My initial thoughts would be, okay, since they're pushing to the downside, my TP will definitely be around the gap that is coming down to fill in the gap. So that would be like my initial thought if there was no fib. That's why majority of the time, like, my fib strategy just really aligns with market structure, price action. We can see that my first TP just like blends well with the gap. So certainly if you're pushing to the downside, that will be a first target. And if you continue to push more to the downside, then my 61.8% fib level will certainly be my second TP, and we can see that that also aligns perfectly well with this trend line right here. So majority of the time my fib just perfectly well blends with market structure, guys. That is how majority of how it goes, and that is why I like Fibonacci strategy, especially the one I use. Like there's a lot of strategy out there in fib. Everything works, just back test and look for the one that actually works for you. That's all that matters. Let me adjust that since I was able to. Let me see. I think that one was a little bit open. Let's adjust the price. I think a little bit more. Okay, let's adjust this. Okay, so I'm just gonna draw what we might push up a little because there's no imbalance, so I just think it might give us some sort of something like this. Then continue to tap to the downside for my first TP. And my second TP, that is, like I used to say, when you get to negative 27% fib level, be careful. Like before you go for like the second TP, which is negative 61.8% fib level, you want to wait for like more confirmation and momentum, because around this area right here are like reversal zones. So I just want you to be careful when we get to negative 27% fib level. Just take your trade, your position out. If you see some momentum, you can put your trade in profit and wait until you get to 61.8% fib level and take. But like, like anything can happen, guys. If you're seeing a buy in the market, at least we want it to break this previous structure right here, to break the trend line previous structure, give us a possible retest for a higher low before we go. But just be open-minded. Like, we know the market does what it wants to do, but as of right now, I'm still seeing more of a sell rather than a buy. But if anything happens and if it changes, then I'm just going to reanalyze based on that current price action. So that is my quick thoughts on gold, guys. Hope you find it helpful. If you do, don't forget to subscribe, comment, like, and share, and I'll see you in my next analysis, guys. Thank you for watching. Bye.